Hello and welcome to Trading the Trend. My name is James Boyd. Today's date, April 16th. Myself, James Boyd, got Connie Hill also with us in the chat. We welcome her and many of you here today. We got with us Fayez, we got with us Dom, David, Vlad, Josh Pink, Scott, aloha back to you, WW, and many others. Grace, hello. Richard, hello. And Richard, Austin, Life in the Fast Lane, welcome. Just real quick, there's our handles there at the bottom at James Boyd CS, at Connie Hill CS. We post educational content, announcements there as well. So just want to make sure that you know that and you can follow us there on X. Just real quick, remember that this class, we always ask the question. What is that question? What trends are you riding? You don't know the answer to that question. You might not be riding any trends. If you actually think you're not riding a trend, you might be riding a trend that you don't know about. Well, today my goal is to open up your eyes. And we'll talk about opening up your eyes and how do you read those charts. The eyes might be open, but you're not trained or skilled to see what those trends are. That is my job. So and passion. Now, as we talk about these examples, we'll talk about them from a stock perspective. Tomorrow, we'll talk about ETFs in the morning, 9:30 a.m. Eastern. So if you want to learn about that, join us tomorrow. That is live only, 9:30 a.m. Eastern on ETFs. Today, we'll talk about stocks and options. Remember, when we talk about options, remember that options carry a high level of risk, not suitable for all investors. When we talk about the information, it's done for general informational purposes only. This webcast discusses technical analysis. There's other approaches, including fundamental analysis, that may assert some different views. I also kind of think about maybe provided added context. Okay, so don't think that technical analysis is the end. That's the beginning. And also remember that our examples would be done in the Paper Money software application for educational purposes only. Investing involves risk, including loss of principal. When we also talk about examples, we need to also understand that we might bring up some future symbols. We're not trading futures. We're looking at future symbols like gold, crude oil, copper, so on, that could relate to maybe what the index is doing, sectors, and so on. That's why we're bringing that up. And also remember, when we talk about our examples, we'll look at those in terms of the technical analysis and the trends of those. And when we talk about trading the trend, we'll talk about what time frames. Three time frames we look at is short term, 2 to 3 days to 2 to 3 weeks, intermediate, 2 to 3 weeks to 2 to 3 months, and then really longer term, 2 to 3 months plus. We'll look at daily and weekly charts. So first off, I did teach this morning on the Trader Talks. I did want to make kind of swing back to a couple things here today. As far as the S&P, still holding 7,000-ish on the S&P. Did make a new high, went to 70.50. I mean, weren't we just at 7,000? Another 50 points, okay? Now, the one area to kind of keep an eye on, and we already talked about kind of the weekly charts. Keep an eye on the S&P for the weekly chart to see if we can't confirm the crossover on the weekly chart. Another chart I think we need to just quickly look at is the SPXEW. Why does it matter? Some investors really look at market breadth. In other words, is it just technology that's going up? Is it just discretionary that's going up, or both? If we take a look at that, say the SPXEW, you're going to notice in this case, we are seeing that the equal weighted, where all, let's say 10 sectors, represent the same percentage. When you look at the product that tracks the SPX, okay, or something like it, that's unequal, okay? When you look at the equal weighted, it's actually made some nice moves to the upside. We know that utilities has lagged, staples has lagged, healthcare has lagged, but that might actually make more moves if the VIX goes lower, okay? But still some good participation from everything else. And by the way, real estate has been somewhat softer, not SPG, okay? But probably 6 out of those 10 sectors have been quite strong. But many people like to look at it. I think we need to make mention of that, okay? Now, the one thing is we also want to keep an eye on is Mr. Russell, the small caps, is that actually going to break out, okay? Keep an eye on that. And the last one that's really kind of lagged here is there may be some upside potential movement that could be maybe building on the Dow Jones. The SPX and the NASDAQ have punched to the upside. Russell is up there, but not as high. but could there be a catch-up trade in large caps? Some of those stocks in the Dow that actually underperformed starting to kind of revitalize just a little bit here. Now, the only thing I want to kind of say is when we talk about, let's say, sectors just briefly before we look at our examples. Gosh, took my breath away. I had to take a little inhale there. Okay. The movement we're seeing in the transports has been unbelievable. Okay. Now, we talked about kind of airlines, right? And rails. I want to kind of make mention of one rail just real quick, CSX. And if you look at that, it's kind of forming, if you will, maybe like a cup and handle pattern. Not much of a pullback so far. Okay. So the handle is not as crystal clear because it's not rounding. The price is kind of staying up near the top. Keep an eye on that. Now, if we kind of said the trucks, let's get into trucks for just a moment, where we're seeing some rounding here, cup-like type of pattern, bull if you wish, is really on FedEx. But also where we kind of see some movements in the transport spaces, need to kind of bring it up, is in some of the trucks. Old Dominion Freight, pretty big move. The other one where we actually saw a big move actually here today, J.B. Hunt Transportation, hello. And if you look at CHRW, some pretty good smashing here to the upside. Again, transport's moving. When you look at the NASDAQ, punching to the upside. Semiconductors, punching to the upside. I mean, got a lot of things here we could talk about. What do you want to talk about first? Well, ain't that the dang truth? Okay, now, anything that you like to talk about first? Now, as I kind of go to some questions, and you might say he doesn't normally go to questions, but I need to see if you have some. I want to go back to one thing that we made mention of before this morning. We talked about volume, right? We talked about that volume. And one of the kind of the examples that I want to pull up just real quick, and I want to go back to the Oracle. We talked about stock volume and then option volume, and then related the option volume to open interest. This morning, we only had the first 45 minutes, okay? Some cases, even less than that. We talked about using the volume of the 21-day average, 21 days being like a month's worth of trading. Now, what's kind of interesting is we're getting into, let's say, the last, 2 hours-ish of the market. The one thing that I did not say today that I need to say now is, I was just kind of using that 30 to 40 day, let's say 30-ish days to expiration as kind of a way to kind of gauge, are we really seeing option volume? So stock volume, that's, number one, seeing price movement, that's good. Seeing the stock volume, a lot of people like to see that. But we know that not everyone attacks the trend just with stock. Well, one way to try to latch onto that trend, and that's the question, how are you riding that trend? I mean, is it buying stock? Is it maybe doing an option trade? I mean, how are you trying to attack that trend? Well, if we take a look at something, we were just looking at, let's say, the options, 30 days to expiration. Well, what does that not include? We're assuming that everyone is going to go out 30 days to expiration. That's not true. Okay. Let me show you kind of something that I kind of saw this morning on Oracle and some others, and I'll make mention of Micron as well. And Micron will be our first trade example. Don't trade ahead of me in the paper money account because let's do it together. Now, if I open up the May, the yellow is saying these are weekly options. Again, I'm looking to kind of see, is there any unusual volume, option volume, relative to open interest? It's on the 175. It's on the 180. Okay. 1,300 contracts here today, bought or sold. Okay. Not netted off over the open interest. If we go the 1st of May, you're going to see anything that stands out. That one stands out, the 190. This one stands out, the 195. But notice something here where this is where it gets interesting. Only 8 days. 8 days. Mama mia. Okay. 8 days. Look at the number of contracts. And this was the number coming into today, 10,290. The number of contracts that were bought or sold, not netted off, 7,200 on the 180. 5,100 contracts on the 185. And it's smashing its way to 6,000 contracts on the 190 and the 2,200. So a lot of times people say, well, yeah, I can look at the chart and say, look at the price movement. But some people feel like, hey, if I can get that stock volume, that's like a pillow. If I can get the option volume like a blanket, that just makes me feel better. Look, that doesn't mean a whole lot to me, okay? But some people just really like to see the volume. I don't talk about volume all the time because it's not something that's going to be day over day. But from yesterday till today, the volume has become so apparent that it's poking us in the eye. That these moves of not just price is king, but we're also seeing the addition of volume pumping in. Okay? Now, the significance of the volume to me who looks at the price is that we know that investors tend to buy in waves. What does that mean? Higher highs, higher lows. That if someone got in here or there, that's probably not all the money they got. Okay? This is probably not all the money they got. This is probably not all the money they got. If they liked it here, if they got any pullback to here, they might try to buy more. They're trying to buy in waves. They're trying to build positions. Okay? And I think that's something I've tried to hammer this week. And if you think that, hey, every time you get in, you buy 50 shares, if that's what everyone else does, it's not. Okay? Some people are buying a lot bigger positions, and they're not putting it all on at one time. Okay? Now, so that's first off. The takeaway from this is do not assume that, oh, we only look at the monthly option 30 days out and we just check the volume. Can anyone tell me why someone might be looking at options only to 8 days to expiration? Does anybody know? We would actually probably say that this would be pretty hardcore speculation that this move, whatever it is, this might be something that happens slower. No, faster. Okay. Now we don't know. The only ones that know whether someone are they buying or selling is the person or the entity doing it and or the broker. Okay. That way, because they're the only ones that can actually see what's in their portfolios. They can see what's in their portfolios. Not the trade, but see what's in their portfolio. Do they have the position? Are they building on it? Are they subtracting? What are they doing? Okay. Now, we already talked about Oracle this morning, and I want to go back. Let's look at the paper money account just real quick. I want to just double check something real quick. Okay. Trade. Okay. Now, if we look at the trade, I just want to double check something. Yeah, this was the position. Let me just double check. So the position that we did this morning was August 16th. Now, you know what makes me absolutely sick? That AMD position we talked about too. I forgot to send the confirm and send. If I could take myself out behind my house right now and give myself a verbal speaking to, I would. All right, so here it is. I know. Okay. James, be nice to yourself. I'm trying. Now, so Oracle did fill the AMD position from this morning's gap. That gap was at 265. I mean, it topped out at 279. We're still at 276. Pretty good move. Don't worry, I got one that might try to do something similar. Let's talk about our first position here, okay? Now, I want to kind of also bring this up. We know that the semiconductors have been aggressively going up. But let's speak to just real quick the sectors for just a moment, okay? So a lot of times people will make comments like, well, I just don't know how to track them. Well, I mean, we've gone over that, but if we just want to hit it again, let's do that, okay? So first off, these are the sectors that I talk about, okay? We got tech, staples, healthcare. I do include real estate there. I do include the gold right there. We include the transports. If this was an ETF class, we would use the different ticker symbols, ETFs. I cannot speak to ETFs on this class, so I'm using a product, an index, that's not tradable. They're an index, okay? Now, the biggest thing is when we track the relative strength, we like to use the RS. The RS for the RS5 or relative strength short. Why do we not just spell that out? It would take more column room. So I just kind of abbreviated that. Now, we know that the relative strength is not just one time period, okay? Think of this like in college. You did really good this semester, but what about the other semesters? What about the other year, your freshman year, and so on? So if we looked at this and said, which sectors are giving us a little punch? Well, if we're talking about the most short term, RS5 for the last 5 trading days, it is going to be yours truly, okay? It's going to be obviously the tech, the communications, the tech, and the semis. That is what the green color is. The green color is showing a scale ranking compared to the S&P 500. That doesn't take very long to figure that out. Now, if we said what horse is still actually doing better than, okay, the S&P, that's light green. Light green means it's been doing better than the S&P. It's been discretionary, okay? Now, if you said, I don't have that, then go to my X page, okay? And this is the question. That's why I'm kind of interjecting this here. So the RS5, okay, if you said, I don't have that, I've tried to give you that, but for some reason you have your arms closed. Please open your arms and receive this gift, okay? And this literally is a gift, okay? So right here on this page that I just sent to you, and I'm going to give you this exact link, okay? Now this link right here is showing, this is the question, I'm answering the question, okay? The RS5, what is it called? What does it stand for? What is it? Relative strength compared to the SPX. It's meant to actually show us the 1 week performance, and there's the code. It is case sensitive, okay? And I'll show you how to put the code on just a sec. Now, notice it actually says up top, column heading, and then kind of a space, purpose, and then a space. So what's the column heading? What's the purpose? What's the script code? All right. So when I look at, let's say, the week percentage, what's the purpose? The purpose is momentum. What's the code? There it is in blue. Okay. Remember when we talk about scripts not guaranteed for time or accuracy, but to find that relative strength, oh my gosh, we didn't have some tools. It ain't that hard. Okay. Now here's what I'm going to show you that's a little interesting. If we pulled up, let's say, the Dow Jones itself, it would not take a PhD to know that the stocks in the Dow Jones are underperforming the S&P. How do we know that? In the section of the RS5, 10, 21, 42, and 63, and so on, 1 week, 2 week, 1 month, 2 months, 3 months, what do you notice? What do you notice? My gosh, there's a lot of red on this, even in different time frames. What is that telling us? The stocks in the Dow Jones on a majority basis are underperforming the S&P. What does that tell us? If the investor says I try to get into stocks that have relative strength, there's a small niche of stocks in the Dow that are actually performing fairly decently over the last 5 to 10 trading days. But on average, most of these stocks like Coca-Cola, Boeing, Caterpillar, PG, Triple M, Home Depot, they are underperforming. What does that tell us? If you're trying to ride relative strength, you're probably looking at S&P stocks first. Does this make sense? This is how we use the tool. You can go to a store, buy a tool, doesn't mean you know how to use the tool. So I want to make sure is what is the date, what is the script showing us in seconds, okay? Now, here's the deal. Let's go back to just real quick that example, and let's take a quick peeky at the example. We were on what? Micron, right? Now, Micron, and I'll show you how to put the script on in a second. Kind of answer the first part, I'll answer the second. Now, the trade tab. Now, when you look at, let's say, Micron, we know that Micron is part of the semiconductors. Can anyone actually tell me stocks in the semiconductors that are making a pretty big decent move? Again, you don't need to have a PhD. If we know how to use the tools, go to MarketWatch. We go to Visualize. That's not that bad. MarketWatch, Visualize, click. And then what we're going to see is, now I'm just going to use the S&P 500. Bigger list, bigger graphical view. But now if I look at this, we see things like, and I'll come to Intel in just a sec. Could you believe that move? I'll talk about that in just a sec. I was so sick here about 40 minutes ago. Okay. Now, we already know on was there. But these lighter color greens, bigger moves. Now, stocks like AMD, we talked about, Intel, we'll talk about, TXN. How long does it take to make a list? It didn't take a time to make a list. The list is given to us. We make it too hard, okay? Now, don't look at Dell either. That was also 7%. Mama mia. Okay, now, let's go back up to this just real quick, okay? Some people are talking about sitting in cash. Yeah, anyways. But if we go back to this just real quick, we're going to bring up MU. Why are we going to do that? Well, if we go back to what we talked about this morning, let's go back to the trade page. Let's go look and double check the volume for just a second, okay? What's the stock volume like? The volume today is lower than it's been on average. We said today that when you get selling off, the volume tends to get higher. That's why that yellow bar there increased, and it did. Okay, you get a sell off, you get a higher volume. Now what you're going to notice is the average volume is higher. Why? Because they were selling pressure. So the recent volume is not as high as it was before because when the MU fell, you actually saw the average volume increase as people were saying, get me out of the position. Now, I always kind of compare that to if we were in a building, let's say a mall in Dillard's, they said fire, fire, fire. We're probably not going to walk out of Dillard's, the mall, whatever. We're going to run out. Well, when things go back to the upside, the building's not on fire. It's actually kind of slightly calming. Seeing your account go up in value is kind of nice. Well, all of a sudden, we're not running in per se. We're just kind of walking in, taking a look around. Well, if we go to the trade tab for just a second, any abnormal volume. Well, to kind of show a continuation of what we talked about this morning, yeah, something that pokes us right in the eye is the front week expiration, just like we saw in Oracle, 8 days to expiration, that's a huge. 460s is big. We actually also see 50% there. That's higher than the open interest in total. You're actually going to see that one's about 30%. And if we go down to, like, say, even these ones, that's higher than the open interest coming into today. You're going to see that's 50%. That's about 30%. And if we come down and look at, are they getting in any others? Okay. That one is about 25%. That's probably the biggest that we actually see there. Now, have I seen where just multiple months, multiple strikes, calls and puts have actually been just off the charts? Yeah. NVIDIA. Okay. Now, in our example, what I'm going to do here is we're going to buy some shares of stock. Okay. Stock. I said that. Now, what I'm going to do here is I'm going to right click on this chart. Okay. Right click on this chart, buy custom, and I'm going to say with OCO bracket. Now, before I got into the session, I posted two things about the NASDAQ. If you pull that up, it was actually the NASDAQ is up for 12 consecutive days, 12 consecutive days in a row, first time since 2017. You remember 2017? Oh, gosh. Don't look, okay? Now, the NASDAQ 100 is doing something we haven't seen but 7 times in 40 years. Now, when you look at many of these NASDAQ charts, the one thing that you'll notice on many of them is the width of the channels. That's not normal to see channels that wide. If the prices break out to the upside, investors might speculate, putting positions on, if that stock might go to the target. Now, don't know if it's going to, but we're going to put on trades and see if it could get near there. I'm going to go buy custom with the OCO bracket. Now, I want to kind of correct something I said before. Number one is when we do this at or below, at or above type of order, we call buy the dip or buy the rip in the price to the upside. We want to change that limit to a market, dated GTC. Meaning it's that entry is conditional upon the stock going at or below a certain price or at or above a certain price. Now, I'm going to go back to one other thing that we said this morning. So if we said, hey, we're going to try to buy at or below, we might try to buy near a support, horizontal or diagonal support, and or a moving average. All right. If we actually said, hey, where am I going to put the price on the upside? It's going to be really based upon where's the most recent red candle. I'm pointing at it. Second, what is that high? Answer, 463.95. We might say I'm going to set that buy stop or that order to get in at or above that price. If I take 463.95, add, okay, even 1%, it's going to be 464. Sorry, 463.95 times 1%, 468. Okay. So what I'm going to do in this case is I'm going to use that price. Now, when I was kind of looking at the high, if I point to that, you're now going to see that it'll give us H the high. That's where I was getting that number. Point to the candle that you're looking at. That one. Now you're going to see where I get the 463.95. Okay. Now what I'm going to do is let me slide this over, come back to this, click on that gear, bring it up. Now, for this example, what I'm going to do is I'm going to go MU. I'm going to say that we just want to get in maybe a smidge lower, okay, or try to. 458.75, example given. This is trying to get a bounce right here. Let's say I'm just trying to buy in a little bit of a dip. Well, now if we take a look at that, which by the way is pretty close to where the stock is, but that's okay. Mark at or above, change that sign to micron. And now what you're going to see in this case is, okay, I'm going to put that price, 468.59, okay? And here it is. So now when we take a look at this, we're saying, look, if we can get the stock to fall down a little bit more, try to get in at that price or less. Second, if it doesn't fall down and if we can't buy on the dip, we're trying to buy on the rip to the upside in price. Now, first thing we've got to say is just because it goes up to that price, that doesn't guarantee it's going to keep going up. It's just an entry spot, okay? If it goes up to that price, it would be showing trade above the high of the low day, close above the high of the low day, and so on. Notice when we actually look at these prices, we want to verify that actually those are showing right there, and they are. Save, confirm, and send. Now, wait. Okay? That we didn't put the target on. Okay? We did not, the stop, that's fine. But that target, we don't have that. Now, remember the stop is saying if it goes to that price or less, sell it. Now, we did not talk about the stop price. What kind of led us to believe that, hey, we didn't do the stop is if you look at where that order is, it's like these are $1 higher or slightly higher-ish, the same price in that case, or there, $1 lower. So I got to put that stop on. So this is where you want to verify. Now, if I was going to use that 20-period moving average as a support, 441, okay, 66. Now, the good thing about you doing an order, you're not going to be teaching a class looking at the chart. You're not watching the market off to your left. You're not reading a chat on the right-hand side. I'm doing like 3 or 4 things in a row. I'm speaking, I'm listening, I'm watching a chat, I'm watching this screen. I'm also looking at, you're not going to be doing that, okay? Now, 432, but I'm going to show you that it's possible, okay? 432, okay, 82, okay? Now, the target. When you go back to Micron, remember we said, and I don't want to hear that I didn't tell you, okay? When you look at many, let's hold that. When you look at many of these tech, I'm not going to take the widest part of this neutral range. I'm just kind of I'm cutting the bottom off, cutting the top off, because if you use those points, you're going to get a wider range. We take a narrow range, well, you're going to get a lower target. What is the range? Well, that range from 370 to 443, $71. Now, remember I was talking to a gentleman one time, and he goes, wait, and I was explaining to him this concept. He goes, but this seems so interesting. You could get multiple investors thinking the exact same thing, and so it just kind of goes up in an expectation where investors are thinking the same thing, and so it might move there, it might not. And I say, well, it's just kind of like real estate, right? If I thought that such and such area was a good place to live and other people think the same, well, they might want to move there. They might want to get a second home there, and so on. So we do this in other areas, right? It's not the only area. Now, what I'm going to do is I'm going to put the 517, okay? 517. We might even do a little lower if we want to kind of give it an area. Now, trade number one that I'm going to do right now is I'm going to take this position, going to go back to the 4,000, okay, it's going to be about 8 shares. Got a target now. Okay, read it out loud, 517. That price or less. Now, notice on the buy, we're saying if we go to this price or below, or this price or above, we have to wash out of our minds that we're always buying on the pullback. You're a dip buyer if you do that. What you're missing is the rip moves to the upside, okay? Now, it's buying it, not both, one or the other. Now, someone might say, well, it could buy, wonder if it has a flash crash. If it goes down, it goes up. Have you ever had a fill like that? I mean, that's a good question. I mean, theoretically, maybe, but I'm just saying on a 99.99999, keep going. How many times have you gotten filled down at 458, 75, and then got, I mean, could it happen? Maybe, but high probability of the time, it's going to fill at one or the other, okay? Because once it actually fills here, it cancels there, okay? Now, send the order. Got to fix that out. I'm starting to run out of money here, okay? Now, so that's trade number one, Micron. Now, the one other one I kind of want to make mention of just real quick is when you take a look at, let's say, ADI. Now, by the way, where do we get the list? And this is what people ask me, where did you get the list? The same list you got, okay? So here's the thing, we can take the same stocks, but we're reading it a little different. So if I use the same list that you have, MarketWatch, S&P 500, now when you pulled up, we already know that SOX is one of the stronger areas. One of the other ones we're kind of getting a little push on is ADI. Now, ADI is not, and I want to talk about ADI in Intel for just a second. Intel is brighter green, and you're looking at ADI darker green. Darker green is not bad. It's just not up the same percentage as, let's say, AMD, okay? Green is good, but lighter green is stronger, okay? Now, what I'm going to do is, why am I bringing up AMD? Well, if we look at AMD, there's the move that it actually has, and we talked about this morning, but I want to kind of look and see, is there any other stock like ADI that is getting that same type of move, okay? Now, I want to kind of talk about this buy stop limit, okay? Now, this buy stop limit, if we ask ourselves the question, what was the lowest, most recent red candle? 414. All right. That was the first question. What's the lowest, most recent red candle? Second, what is the high of that red candle? The high of that red candle, 352.67. Are we trading above, closing above that area? So it's 3 questions we keep asking ourselves. That is why there's a green dot there. All right. Now what I'm going to do is I'm going to kind of say, look, I'm a little concerned, and people say this, okay? I'm on a 1-minute chart, and I'm seeing a big bear market in that 1-minute chart. Okay. We're not trading off the 1-minute charts. We're trading off the daily charts, okay? Now, the problem with looking at a short-term intraday chart is you're not seeing the bigger picture. That's the problem. Now, you might say, what the heck do you know? And the answer is a lot more than I lead on, okay? Know all about that short-term time frame on different products, long and short. Now, if I take a look at this, I'm going to right-click on this. I'm going to go to Buy Custom. I'm going to go with OCO Bracket. So if we said, look, I'm not going to try to buy the dip. I'm going to actually try to buy the rip to the upside, potentially. Now, if we look at this, what is that high today? Answer, 355.85-ish. Where I right-clicked on the chart was 355.88. Now, when we do these orders, we're saying, look, get in if it goes to that price or higher, okay? Second, I'm okay with buying up to a certain amount. Now, this is just kind of like, I call it a field goal post, okay? So if I said, hey, I'm going to try to buy at 355.88, okay? And I'm okay to buy up to 355.90. Well, my gosh, I mean, that's only 2 pennies. So what happens is if these 2 lines, buy it if it goes to 355.88 or higher, and then I'm willing to buy it up to 355.90, That's a small range. I mean, you can't barely see it. So in most cases, you're probably going to widen that out to probably 50 cents, maybe a dollar. If I was a little bit more conservative, I just might say 50 cents. Okay. Now what I'm going to do is I'm going to take just 50 cents. The wider that gap, the greater the chance of the fill might be. However, the issue with that is, what if the stock gaps to the upside and leaves us in the dust? It could do that. Okay. So we're saying, look, buy it if it goes to that price, 355.88 or higher, and you can buy up to 356.38. That's the cap. So now what you're going to see in this case is, now what's the target? Go back to this. Classic measurement. There's your cup pattern. Now, some people, when you see cups, thinking U pattern, you're thinking maybe V pattern, you're thinking W pattern, all the above, you're thinking Fibonacci, for crying out loud. If we take a look at this, what you're now going to see is, and by the way, I'm going to take my wife to Leonardo Fibonacci in Pisa, Italy next year for a month, and I'm going to cry right when I see the statue again, okay? I've already cried once when I was there, okay? So you think there's not a statue, you can look it up, there is one. Now, if you like math, you kind of know it's kind of important. Now, if you take a look at this, if we said 161 extension, it's 397.44. Now, I showed you yesterday, if you think that is pie in the daggum sky, you might say, look, man, I'm not going to go up that high. I'm okay with even selling halfway there, okay? Well, we're just going to add on a coefficient. If we're looking at the 161 coefficient, let's just add on 1.304, something like that, whatever, okay? If I did that, it's going to put a line in the middle. Think of that as halfway. Okay, so if you're saying, James, I'd rather sell with a greater chance of it trying to get to that area, well, we'll put a line there. Okay, 378.86. Got to stop underneath. Let's confirm that. Got to put the stop there. Where is that support area? Well, if I look at this recent drawdown area, it's right around 346.88. 346.88 less 2%. It's going to give us 339.94. 339.94. Okay, let's confirm that. Check. Now, if I go data GTC, there it is. And now what I'm going to do is, if I pull this up, I'm going to go back to, I'm going to have to put in the other account. Just ran out of money. Okay. Now, if I go to that, go to the IRA, there it is. If I keep the numbers dollar-wise the same, there it is. Confirm and send. Now, remember, we got to get to this price or higher, a cap to fill up to there, okay? If it does fill, the stop and target is valid. If the entry is made, that stop is saying if we go to that price or less, then sell it at that price or less. Send the order. I'm rejected there too. I ran out of money. I got nothing, okay? So this is why we're going to have to probably sell some positions. But if we had some capital, those would be the examples. Now, what I'm going to do is, if I bring up also the question, which was, how do you put those scripts on real quick? Well, if you have the script based on what I showed you on my X page, you're now going to notice that if I had that, how do you put them on? Okay. Well, if we just kind of copied what was on my X page, go up to the very top right, go to setup, open shared item. Okay. Set up, open shared item. And what I could do is just type it in. Now, we don't need, all we really need is the last part. Exclamation, TABY, capital Q, etc. If I now go preview, and let's just call this, if you don't mind, JP. Okay, that's going to be the column heading. So now if I say import this, where does it go? Well, if we want to customize the column heading, right click on that column heading, customize, click anywhere up top, okay? Any of those columns, customize the columns. Customize, what do we call it? We call it JP, okay? There it is, click, and we're just gonna move it up. Now, we typed in JP because we didn't want to go down through all the different ones. JP, there it is, and just add it to the right. If we add it to the right, it's right there, Can we move them up and down? Can we move them left and right? Yeah, sure. Okay. But that's how you put one on. You put one on, you can put any of them on. Think of this as a buffet. You get to put on the script headings that you like, okay? That you like to look at. All right, now, what I'm going to do is, yeah, comment was sell on margin to paper trading or buy on margin to paper trading. Well, we actually said we weren't going to do that because it's a paper money account. Second, we were only going to try to invest what was in the account, meaning a non-leveraged portfolio, meaning where if we had 150,000 when we started, hypothetically, we were only going to invest the amount of money that was in the portfolio. So when we're looking at, let's say, returns, we're not saying we use 150,000 plus 30 more thousand on top because we borrowed it, hence margin. And I know I'm looking at the IRA, I get it. Or if we said, hey, we start with 40,000, we use all the 40,000 plus we borrowed 20. Well, that's leverage returns. We're not doing that, okay? We're only using what we actually have available to us. All right. Okay, Dave, like where you're going? Well, interesting question. Now, the one thing I also want to kind of make mention of is that other stock, Intel. And the other day we sold Intel and it was just up in the upper deck, to say the least. And we said that we were going to sell the stock because it had gotten to kind of a really, really, really high point. The way we kind of measure real high or different levels of that is moving average envelopes, which is a percentage off for us off the 10-day exponential moving average. Blue line is your classic 10-period moving average. Yellow 3% above, red 5% above, white 7% above the exponential, and that the dark blue line 10% above the exponential. Now here's the thing. Not everyone is trading off technicals. Some people will just buy an expectation of what they think the future earnings per share is going to be and extrapolate a multiple, okay? They could say, look, we think the earnings is going to be, let's say, $3, and we're going to give that a 30 price multiple. Well, if you think earnings per share is going to be 3, and you think that justified multiple of the earnings per share is 30, well, it give you a forecasted price of 90. Now, justified price multiple is just a formula. The earnings per share is a forecast. They don't know for sure. But the biggest actually thing is there's some people that are not trading off technicals. They're looking at the fundamentals. The other thing they're also looking at is if the SOX goes to the upside, could Intel go up with it? Now, last one, 90 seconds. We're not going to go into this as far as shares. Too sensitive to direction. But what we are going to do is we're going to try to do a cash secured put and then set a stop underneath the low from yesterday. How do we do that? Funny you should ask. So now what I'm going to do in this case is I'm going to go down to the monthly expiration and we're going to look at, let's say, which ones are selling a delta of 30 to 40. I'm going to pick the lower strike. Right click on that. Sell custom, and I'm going to say with the OCO bracket. Now, we did this last Tuesday when we talked about selling puts like as a trade. So if we sell it for 320, if we're trying to get, let's say, 80% of that or 65% of that, well, if we try to grab 65% of that, it would only leave 35% left. That would give us a price of 112 or lower. If we buy it back for 112 or lower, we're trying to keep the difference, less the commission. Now, the biggest thing is the stop. It's not going to be a stop like how you're thinking. It's going to be a conditional exit, provided that the stock actually stays above that low. Where's the low? 62.82. And what we're going to say here in closing is if we go below, let's say 62, and I'm going to give it a little wiggle room. If we go below that 62 threshold, I don't want to be in that short put anymore. Okay? Now, a short put by itself is not as bullish as shares initially. And so what we're saying is, look, we're going to be bullish, but if all of a sudden this trend reverses, buy the short put back. You buy the short put back, it's trying to get out of your obligation. Okay? Now, the biggest actually thing is if you did not see that class from last week on Tuesday, Investing Master Series, cash secured puts or trading short puts, right? Check that out. But I'm going to go data GTC, data GTC. Okay. So key concepts we talked about. Number one is order types, getting good at those orders, buying on the dip, buying on the rip in the price. Second, maybe using options as a way to kind of say, I'll be bullish as long as we stay above a certain price point. Using those certain types of orders and strategies to try to ride the trend. Now we got Brett Crowther coming up next with short verticals. I'll be back on with ETFs tomorrow morning and advanced charting for Cameron May tomorrow. Want to say thanks to Connie for answering those questions in chat. Remember that with what we discussed, it was done for example illustrative purposes only. And remember, this has been the class on trading the trend. What trends are you riding? Have a great day. Stay tuned for our next class coming up next, and don't forget to subscribe. Bye-bye.